EVgo announced their earnings last week, and on the news we had a gap higher, only to run into resistance uh, at the 200-day moving average, and that was serving as dynamic resistance. So you had a gap higher, although you closed green for the day, you sold off from the highs of the day. And then you had another gap higher again, only to sell off once reaching the highs for the day. Let's get into the article regarding the earnings, and then we'll continue to get into the analysis. This article is coming from investing.com. So shares of EVgo traded up more than 27% Thursday after the EV charging company reported their Q2 earnings. Furthermore, the electric vehicle charging network has revised its revenue guidance for the entire year, signaling positive growth. Notably, the private label Extend unit for the businesses played a significant role, contributing approximately two-thirds of the total revenue for the quarter. They are definitely growing. My wife and I went to the newest Home Depot in my neighborhood, and on the other side of the lot, we saw several EVgo charging stations. And EVgo is just trying to carve out their own lane within the entire EV charging business. You got the 800 Gorilla in Tesla, and then you have other companies that are trying to just take some crumbs of the pie. Now, let's go back to the analysis. And although you had a pop in the stock, I'm not convinced that the bottom is in. If you go to the monthly chart, I had projected maybe some weeks or months ago that price has not fallen and hit the lowest yet. I'm anticipating further declines, not necessarily zero, but I want to see some type of rounding in the price action. I want to see a double bottom, and I definitely want to see price close to definitively above this upward portion of this down channel. Before we look at the weekly chart, here's one reason why I'm not convinced. Just kind of looking at their revenue and the earnings going back to the middle of last year. Although revenues has been increasing, their earnings per share has still been negative, meaning they're not making any money, and that's expected. This is a pretty much a startup, and as you try to achieve economies of scale, you need capital to grow that network, that infrastructure. As a result, I'm not convinced the bottom is in. Now, going back to the weekly chart, nevertheless, it was a great week for the EVgo bag holders. Like I said, however, on the daily chart, this level of $6 is resistance. I'm just trying to see if there's any other levels of interest. So you have the resistance at $6, which represents the 200-day moving average. But on the weekly chart, this is going to be another level of resistance as well. It was support in the past at the $7 level, now serving as resistance. So, for price to move higher, it needs to get through not only the 200-day moving average, but also this resistance at $7 on the weekly chart. So I probably need to revise my projections in terms of the bottom. I don't anticipate this going into per se 2025, where right now, based on this W pattern, that's where price is going to, with confirmation, break out as evidenced by a double bottom or this rounding accumulation phase. As long as price stays in this downward channel, again, I'm not convinced. The lows are in. Thanks for watching. Subscribe, please like the video.